Hey, so in my last video, which again I'm just remaking the video because I was speaking really far away from my mic, you could barely hear me. It sucks. It was a 30-minute video, but I'm gonna go over everything again. So, what do I look for in trading? Again, I made a video that's similar to this, or a few videos that's similar to this about a year ago, but everything is I've gotten way better over the past year, right? I can improve forever and always. I never know enough. I can always fine-tune things. A lot of this is because of people like Urban, which I've gotten to, or I've started understanding the whys behind price movement, which I didn't really understand entirely before. I saw certain things repeating, been profitable now for years, but it wasn't enough. So to begin with, on the right side of my cursor, right, which I can draw an arrow, right there, you have a picture of my equity curve, right? Right here, with each candle here representing a day. So green is a green day and red is a red day. Now I can take many trades individual on each day there, but you can see the general direction. It's upwards, up only, right? Parabola. Okay, regardless of market conditions. That's since July. The market's crashed in August. They've been going down recently. Doesn't matter. I'm not going to carry by any market conditions. Okay. So how am I able to keep that consistency? What separates me from the average person? Well, it's because I understand liquidity. I know how to manage risk. I understand my own psychology. I have made a lot of mistakes that you're probably making. I'm going to go over what mistakes you're making. We're going to talk about speculation, risk management, and psychology. Okay. So to start off with, this was my view. Let's go to BTC USDT. Let's go to the 4 hourly. You might say, oh, well, everything that you have put here on this chart, this is all in hindsight. It's absolutely not. Here is the chart from way before it happened, right? And we also have this right here, which signifies exactly the price movement that we've had in the past week or so. So this is not about talking about, oh, I've been right or wrong. I could care less about that. I want you to understand why I believe X and Y thing is likely to happen and how that can help you. Okay? Now, when the price was over here, okay, I drew this. There's a very specific reason why I drew it like this. So we're gonna sweep these highs, make a slightly higher high. I did not specify why this could happen, but it's because of a bearish divergence often. Okay, so like when you make this new higher high, there's fewer people who are interested in buying here, and normally it can lead to a reversal, right? Like in a multiple drives of bearish divergence. I'm gonna get into divergences later, but I just want to clarify, okay? So when we're down here, right? They have engineered liquidity here. What do I mean by that? Well, you see how this high is pretty much the same as this, and all of these highs just below this, it's all equalized as well. Now we have bearish divergences. You can see the RSI is making lower highs, while the price is making equal highs and or slightly higher highs, right? So fewer people pushing price up here, but the fewer people who push price up here manage to, in this case, engineer liquidity in a way where all the shorts in this case have to have their stop loss in the same exact place. So what happens when everyone gets stopped at the exact same time? You have built up energy, right? Now you get forced buying. Okay, so let's say that you were a sophisticated individual and you bought it down here, right? If you just sell anywhere and you're a billionaire, you will get slippage, and you might see things like this where it just completely dumps in a vertical line, right? Instead, you can create structure like this where you form equal highs and equal highs just below the equal highs, and then it creates a incentive for price to go above here first of all, because a lot of these people all get fucked in the exact same area. This is like you should view it like a terrorist. Okay, the market is a terrorist. A terrorist can choose between killing 5 people or 200 people. Where is it likely to go? It's probably going to kill 200 people. So in this case, the market goes higher. Okay. Now here's this price action right here. So what I'm circling with my mouse is this price action right here on very low time frames. Okay, so what do we have here? Well, we had more equal highs right here on very low time frames. A high that's equal to this high, that's equal to this high, which is equal to this high. We had a higher low in the price action, lower low in the RSI. Okay, so if this is an uptrend and it's a counter trend move in the primary trend, which in this case would be a higher low, right? We don't know that at this point, but we have a hidden bullish divergence. So at this low compared to this low, more people are interested in selling, which we can see right here, yet price was unable to go lower. That can be bullish, along with this being equal low, this being equal low, or this being a low that's equal to this, that's equal to these lows, which we sweep, we come back up, make a higher high above this cluster right here, and then we come back down, and then we reclaim the range low. Now we have incentive to go above all of these equal highs. which is why I wrote here. I'm, and I want to remove my media file and image just real quick. Beats equalize again just below high turn from equal highs, probably 100k plus today, then dump to below 91k. I'm looking for this take liquidity in both directions. The only thing I can make it go down before it goes up and grabs high turn from liquidity is above is if hourly divergence cock block it, right? And so what I want to showcase in this example is a more zoomed in view, right? Which the rest of this is here. Okay, so in this case, I think it's going to go higher, right? Probably 100k plus today and dump below 91k after. So we go up to the equal highs. Now we're going to sweep it. X marks the spot, right? Take out all of this. When we do that, you can see the volume spiking, which means that a lot of shorts in this case got stopped out, all right? And then it keeps grinding higher. Here we this is right before the dump. Okay, so this is in this case when price is up here. Okay, that's what this is. And so what did I say with the initial tweet? Right? Make a high, sweep 100k up to about 102k, make a slightly higher high. About 102k, make a slightly higher high, which is exactly what we did here, which is what I pointed out here as well in the end of this. So we did this, and this is what creates the bearish divergence. So right here, we're engineering even more liquidity, right? So basically, the people who are able to move the market, if they have enough money and they can move Bitcoin, they can engineer enough liquidity to the point where they can get price pretty much wherever they want. Okay, so we have a high here that's equal to this high, which is equal to this high. We have a high here that's equal to this high, that's equal to this high. Okay, so I believe all of this is gonna get hit. Shocker! Another shocker, guys. Almost says that everything is dependent on liquid sweeps. Why does it reverse here? Well, you might see this and you might understand, okay, so it swept liquidity. No, but you need to understand why. Anyone that accumulated way lower has the perfect opportunity to sell here. Why? Because it's exit liquidity. You get the perfect exit liquidity. Okay. You get forced buying for you to sell if you bought down here. Someone has to buy it from you. Well, what are you doing when you form these equal highs? You're engineering liquidity. So anyone that's shorting it from 1630 to 130 has to get, well, they get stopped out and or liquidated out of their positions, which creates forced buying that you can sell into, which can create a reversal. You get it? All right. Now, this is a higher time frames then. After I thought it was going to do this. This is on January 7th at 4 a.m. Okay? Price is 102k and I believe it's going to do this. So a lot of people were shocked when price did this, right? It literally did this exact same thing, which I have not moved any of this. You can literally see it in the tweet right before. Okay? So a lot of people were shocked with this aggressive sell-off. No, it's actually very obvious why they're doing this. So, uh, they have engineered liquidity. They swept the liquidity. In this case, we had a high and an equal high, which is not ideal actually if you want to short. I actually got front round shorts here. As I wrote here, bulls think this is support of resistance just taken out and long into it because if this high, right? Oh, previous highs now the new floor, right? Previous highs now the new floor, right? Now we fall below it. We retest all of this shit, which is bearish. We fall down and make more equal lows against this or very close to it. Okay, we grind against it. We bounce back up and we sweep all of these equal highs. Now we're back down here again. I believe that it's now gonna do this. So, is it gonna crash below here, or is it gonna just bounce here a few percentage below it? Well, it depends. And depending on what it does, there was an explanation for why it did what it did. Now, the average person is just gonna see it visually, and they're gonna understand the whys. This is where I'm gonna give credit to Urban Bourbon, okay? Sir Urban Bourbon on Twitch. This is his Twitch, okay? I've been profitable for years, but he made me understand why price moves the way it does, and it was a perfect way to explain things, okay? So, if the price goes below here, a lot of people are going to think it's over below here as their stop loss gets hit, but it could likely reverse after the sweep. In the bullish scenario, you want to see only a 2 to 4% sweep. You don't want to get too far away from this, okay? Because if you get too far away, even mean reversion can create this or turn this into resistance, okay? So a lot of this is intuition experience. I can't articulate everything, but I'm trying my best, okay? But if you want this to be bullish, or it's not about what you want, but if this is bullish, it's going to do something like this. Maybe it rejects once, right? Oh my God, everyone's going to sell into this because all of these lows are now resistance, right? And the shorts are going to get baited. And let's say it does this, and then it comes back down to the range low right here, and then it does that. That's bullish, okay? Why? And let's say for the cherry on the top right here between these two, you get a hidden bullish divergence as you're making this higher low compared to right here. You're making a lower low on the RSI, which is bullish, okay? Because you're more people are interested in selling, yet pricing them to go below this previous low, which can lead to continuation higher up, right? And so in this case, the way Urban asks this, and I'm gonna quote him, and I'm gonna give him credit as well. Again, here's his Twitch, okay? Why did price not crash below here? Well, it's because someone had the liquidity, someone had the money to absorb all of this selling pressure. How do we know that there's going to be selling pressure? Because we have 54 days of stop losses. There's stop loss below here. That is the same stop losses as over here, same stop losses over here and here, right? Every time we bounce here, we're just building up more energy. We're engineering more liquidity for a potential worse move down. It could crash. Now, I'm gonna give you an analogy as well. So, or I'm gonna give you a comparison that happened on lower time frames as well. So you just buy it here because you have, let's say, 15-minute bullish divergences, multiple drives or something. If this happens, which again, I believe there's a 95% chance that this happens, that it rolls over in the next few days, and either it crashes or it reclaims the range low and we go for a new high. Okay, but I don't think this high. I think the probability of going below here is 95% before we take out this high, right? Because again, think about this logically. If this happens, it means, as Urban says, someone had the buying pressure to absorb all of the selling pressure. This is the guy you want to trade with. You buy the reclaim. Why? Because then everyone who shorted on the deviation below here, just like everyone who shorted or longed it on the deviation above here, are trapped. They can be used as fuel to go higher. Okay? So understand the idea, right? Bearish scenario: extreme capitulation with no reclaim, no fragile structure left behind for incentive to go higher after it's swept into no reclaims. So let's go down to the lower time frames. You can see right here, as price kept pushing lower, we had all of these bullish divergence, making higher lows on our side, lower lows in the price action. So it must bounce here, right? No, it didn't. And I'm going to give you an example of how people are thinking in regards to their psychology and risk management and why it's wrong. Okay. So a lot of people think, oh, support and resistance. Oh, look at this right here. Yeah. You see all of this. This low right here, this became, well, this was support, this is resistance. We can even go further back, right? Like right here. We have a low here, we have a high here, we have a high here, a high here. All of these highs are equal, or more or less, or very close. We deviate above it to make a bearish divergence. You can see we're making a higher higher. If I go to a line chart, we're making higher highs here. We're making lower highs here. Fewer people interested in buying. That means they don't have anyone to sell to, which can lead to this. Okay, so let's say that you buy here. All right, it's logical. All right, you buy right here because well, these wicks is not going to be support, right? All right, so you might have a trade that looks like this. You enter right here, and maybe you have a TP just above that or equal highs, whatever, and your stop loss is there. Okay, now you have 4R. Great. Perfect trade, right? As far as the risk reward goes. But here, when it sells off like this, it goes below here, and right before your stop loss gets hit, which is right beneath here, then what happens? Your brain tries to, you think that, oh, it must bounce here, so I'm just gonna move my stop loss. Okay, so you move your stop loss. Now your stop loss is below here, right? Below this low. Right? Okay, it goes below there. Now you're like, but it's dumped so aggressively, it can't just go down forever. I'm just gonna move it a bit more, right? Oh shit, it keeps going lower. But we have all of these hourly bullish divergences, right? Which you can clearly see. Hourly bullish divergences. So price must bounce. Oh, all of a sudden you're completely wrecked because you had a good risk management idea initially, but then you moved the goalpost because cognitive dissonance kicked in. You found reasons to still stay in your trade that's going against you. Something is clearly happening in front of your eyes. It went against you, right? The stop loss should have been hit, but you moved it because you have bad discipline. This is where psychology and risk management kicks in and should, in this case, help you, but you are not thinking rationally. You're emotional because you're inside of the trade. You thought logically before, and oh, if it goes below here, that's probably really bad. We don't really want to find out what happens below that if you're bullish, right? We kept moving the stop loss because you saw all of these reasons, right? Oh, it went below here. It's okay as long as it doesn't go below here. Oh, we're gonna move it. Oh, well, now it's dumped so hard it has to mean revert back up. Oh, it keeps dumping, but we have these hourly bullish ranges. Before you know it, you're in a massive loss. This is how people blow up. So please, don't let cognitive dissonance, which is what this is, your brain clearly sees that something is happening in front of your eyes, but your mind is trying to rationalize a losing position. Stick to your risk management, strict risk management, and rules. Okay? You were the exit liquidity here, and I gave you the reasons why. Now, let's look at the higher time frame divergence context. Okay? So price also had a high here, a high. higher high here and a higher high here. But we're making these lower highs on our side. So as price keeps going higher, which I guess is good, you have bearish divergence. That means doesn't tell you price is gonna crash. It tells you fewer people are pushing up price. What's the problem with that? Well, who are they gonna sell to? They're just buying themselves. Okay, but for them to get out, they have to sell to someone. Well, they were the ones pushing up price, so it's very bad if you get some type of selling pressure. Anyways, look at this. Okay, so we have a high here and a higher high. We have a high here and a lower high, bearish divergence, which can lead to hidden bullish divergence. You can see we had a low here and a lower low on the RSI. A high here, I mean a low here and a higher low here. Okay, so from right here at this low, there is more people interested in selling than right here. Yet price just keeps playing ping pong between the divergences. Regular bearish divergence leads to hidden bullish divergence, which can lead to multiple drives of bearish divergence. All right. Now the probability of the hidden bullish divergence actually being important, as in getting you to RI, is lower if you have prior hidden, or in this case, regular bearish divergence prior to it. If you want to learn what divergences, what they look like and so on, just Google regular, bearish, and bullish divergence, hidden bullish, and bearish divergence. Okay. So this matters. Same thing on the weekly. Okay. So what I want to do is I want to go to the Coinbase chart. This is the 2021 cycle. We had a high here, right, which we went and took out by about 7%. You can see we made a higher high here on the price action, but the RSI made a lower high. This is a volume divergence, okay? So if this makes a way lower high, but this makes a higher high, sure, price went higher. But if there's any selling pressure, in this case, the stock market went down in 2022, then who are they going to sell to? They don't have one to sell to. So this bearish divergence is a sign of weakness, which can lead to a rollover, right? It's the momentum is weak. Okay, this marked the 2021 bull market top. This also marked the 2022 bear market bottom. Higher low on the RSI, lower low on the price action. More people, or fewer people in this case, are interested in selling, yet price went lower. That is indicative of the shorts being greedy. This was indicative of the bulls being greedy, or the longs in this case, and the bears in this case, right? Shorts and the bears, and the longs and the bulls. Same thing right here. So am I telling you that this is the exact same, this is now the top? No, but you need to understand the context of this divergence, right? We made a high, and then we made a high that it went 47% above the prior high, yet we still have we have a bearish divergence, regular bearish divergence. Why is that a problem? Well, because let's say the sailor was T-whopping here, all right, on the move up here. The problem here is that he has no one to sell to, so he's bought all his Bitcoin and he pushed the price up. Partly, I'm not saying it's all him, but a lot of it is probably him. But who is he going to sell to? So you need to understand the context of this, right? Just like the context of this, just like the context of this, to understand what's going on here on the daily, which also had multiple drives of bearish divergence, which has equal lows, right? Because this all that I pointed towards, the regular, weekly, and daily bearish divergence, increase the probability of these equal lows getting swept, okay, at the very least. But it can actually crash from here, and this might be the cycle top if we crash below here and we don't reclaim it as soon as possible, all right? So that's what divergences mean. I explained psychology, I explained risk management, and so on. I just want you to understand the context, right? So what if it goes lower, right here? Let's say it sweeps all of these lows that are equal, right? And it goes down, and then it bleeds lower. But the RSI is making higher lows while the price is making lower lows. Okay, is that a good thing? Do you just buy it or no? You want to buy the reclaim. It's safer to play it like that because then you can risk manage. Because the problem with taking this, right? Oh, you can see how on a line chart the price is going lower, but the RSI is making lower highs. I mean higher lows. So while the price action is making lower lows. So yeah, price keeps going down, and you might think it's going to reverse. But how do you manage your risk around this? You can't. You're better off just waiting for a reversal. Better off waiting for the divergences to actually lead to the bounce and then buy a potential higher low based on speculation. So again, it's 20% speculation, 30% psychology, 50% risk management. And I explained the reasons why. I gave you an example of this right here. I'm gonna leave some links in the description to Urban and to my own Twitch. Again, I recommend Urban. He's the only guy that I do recommend because he doesn't try to sell you bullshit. I'm also not doing it. I don't recommend trading. It's one of the most difficult things ever. It's the most competitive thing in the world, okay? Video games is nothing, sports is nothing. Trading and investing is the most competitive thing ever. How many people care about games? Millions. Sports, tens of millions. Like actually care about it. Trading and investing, hundreds of billions. I mean, hundreds of millions, or let's say 500 million to 2 billion people, right? I don't know exactly, but it's somewhere around there, right? If there's however many people in the world now, there's I think 8 billion or something, right? Let's see. World population 2025. 8 billion. Yeah, you can see what I mean, right? It's the most competitive thing ever, and it's extremely hard to do this because the reasons that I outlined, right? Like dealing with cognitive dissonance, struggling with your risk management and psychology. You need to understand why, the whys behind price movement. And always ask yourself that, because it gives you more confidence. You bet more. You're able to handle the situation better. You know when to not bet more, and so on and so on and so on, right? So, anyways, that's enough for this one. Take care. Enjoy. Peace.